Welcome everyone, it's Sunny and Van where the grass is always greener. This is season 1, episode 3. Thank you for joining us. On this channel, we provide information and education on real estate, business, the blockchain, and cryptocurrencies. Disclaimer alert, the information provided on this channel is for educational purposes only. This is not financial or professional advice. With that being said, let's go on to real estate news. Some BC strata skirting wide open rentals by converting to 55 plus. After the Strata Property Act took effect November 24, some strata councils took a knee-jerk reaction right out of the gate and began the process of switching to 55 plus buildings, said Victoria realtor Tony. Canada will see the weakest level of home sales since 2001 this year, TD report. The housing market outlook for economist Rishi attributes the prediction to the poorest affordability levels since the late 80s and early 90s. Stricter rules around qualifying for a mortgage could be coming as Canada's banking regulator seeks feedback on several proposals to list the number of outstretched borrowers. People are leaving Canada's biggest cities amid a housing crunch. Canada's largest cities are getting bigger and more expensive, forcing hundreds of thousands of people to search for affordable housing elsewhere. Canada's office vacancies hit a record as space floods market. The vacancy rate at Canadian office buildings reached a record high at the end of last year as companies cut back on space while new supply continued to hit the market. Now let's move on to the charts and look at some Bitcoin. Now let's check out the Bitcoin price, but before we do so, just to let you know, we do use TradingView, and if you are interested in this charting software, Movement does have an affiliate link. We'll include that in the description below. Please do click on that link if you're interested in using this software. This software is good for all levels. Let's look at the Bitcoin price right now. Right now you can see it at $18,000, almost $19,000 USD. And let's just go back so we can see what was all-time high. Roughly around, we're looking at Tuesday, 9th November 2021, you're looking at roughly $69,000 USD for a Bitcoin. Over quite some time, you have seen that downward trend in a bear market, and we're currently once again at 18,000, roughly 19,000, 18,000 USD for this Bitcoin. Now, we do believe in the technology around Bitcoin, which is the blockchain. We do feel that the economy will change, and in the future, roughly around 2025, from what we have read online, we do see that 76% of the world financial institutions will be adopting another blockchain by the name of Ripple XRP. Now, this is all speculation. We're not 100% sure if this is going to happen, but there's a lot of advocates out there that are professional expertise in this market and this industry itself that are advocating that XRP will be the system of choice when it comes to blockchain for financial institutions around the world. Stay tuned for more updates on XRP and what's going to be happening in the future. Now, with that being said, let's move on to another stock. We're looking at Apple stock right now, currently trending at roughly $132 USD. Now let's look at the all-time highs. You were looking at roughly around $182, $183 in January of 2022. And as you can see, it was quite volatile at 179 here, went all the way down to $129 USD, back up to $176, and now we are sitting at roughly $133 USD. Let's move on to Amazon stock. As you can see, Amazon stock is roughly at $95 USD. At an all-time high previously, roughly around November 2021, it was at $188 USD. But as you can see, downwards trend, and it is now at $95 USD. Let's move on to Tesla stock. Tesla stock right now is $123 USD. And let's go back to see the all-time high. You can see over here, roughly around November 2021, it was at $414 USD. And again, downwards trend, and it is currently at roughly $123 USD. Now, let's move on to some business news. Some business news that is trending right now. President Biden just announced updates to student loan repayment. JP Morgan tops estimates for fourth quarter revenue, but says mild recession is now central case. Apple CEO Tim Cook requests and receives a 40% pay cut after shareholder vote. Tesla cuts prices in the US and Europe to stoke sales after lackluster year-end deliveries. JP Morgan shutters website it paid $175 million for, accused founders of inventing accounts. Wow, that's a lot of money. Now let's move on to some more business headlines. Goldman Sachs Platform Solutions business lost $1.2 billion in 9 months. Goldman Sachs Group Inc. disclosed a pre-tax loss for its newly created Platform Solutions business of $1.2 billion for the first 9 months of 2022, the bank said in a regulatory filing on Friday. JP Morgan sets aside $1.4 billion for sour loans. Profit beats estimates. JP Morgan Chase & Co. said on Friday it set aside $1.4 billion in anticipation of a mild recession as it reported a better than expected quarterly profit on the back of a strong performance at its trading unit. Investors jump into equities and bonds in Goldilocks scenario B of A. Investors poured money into equity and bond funds and moved money out of gold in the week to Wednesday, according to B of A Global Research, taking heart from a string of positive data points and policy changes. B of A profit beats estimates as higher rates bolster interest income. Bank of America Corp reported a bigger than expected fourth quarter profit on Friday, helped by a surge in net interest income as the U.S. Federal Reserve raised rates through most of last year. BlackRock quarterly profit slips on lower fee income. BlackRock Inc. reported an 18% drop in fourth quarter profit on Friday, hit by a global market rout that squeezed fee income. Now let's move on to properties. Let's look at a property that is available in Vancouver that you may be interested in investing in, or just to have an understanding of what a down payment would look like and what the return on investment would be. We'd like to head over to realtor.ca. Let's put in Vancouver to see what pops up here. Search here, and we're going to put the minimum price at roughly $275,000. Let's put the max price at roughly $500,000. We'll do 1+ beds, and we will do 1+ baths or washrooms. And let's take a look at what's available. Let's head over to this Cole Harbor area. We'll zoom in here to Vancouver, downtown Vancouver, just to see what is available. Let's check out this property, $399,000. Let's check this out right here. It looks like a pretty nice property. It is located at 1534 Harwood Street. The real estate professional here is Kate McPhail, or McPhail. I'm not sure how to say that name. I do apologize if I butchered it. Part of the Stillhaven Real Estate Services. If you're interested in this property, you can reach out to Kate over here or the office down here. Let's look at some pictures. Looks like you got a living room here, a nice little setup. Oh, that's a nice little view. Another picture of the living room, nice little view. You got enough space for a little desk here. A little bit more of the view, a couple of views here. Looks like a kitchen, the living room attached like that. There is a wall separating it. Not bad space. You do have a dining room right here. Dining room, kitchen. Again, the living room. It looks like there is a mini fridge or something over here, maybe a wine. A few more pictures. Yeah, it looks like a little wine cooler. Look at that design in the kitchen. What do you guys think about this design? Backsplash, the cabinetry. It looks like you have a window here too. That's always good. A few more pictures here of the kitchen. Back to the living room. And here we have a picture of the washroom. You got some nice towels here. Looks newly updated, renovated. Another view from the bedroom. That's always good. A couple more pictures of the bedroom. Decent size. You got a little balcony here, or deck. I guess this would be called a balcony. And look at that view. Look at all the buildings here. That's nice. A little bit of fresh air. Another picture of the balcony. Some more views. Quite a bit of pictures. A little bit more of the view that you can get. Oh, nice water picture here. Look at that water scenery. That's great. Another good view of the buildings. You got a little bit of mountains. By the way, in Vancouver, we do have mountains. More views of, looks like there are more views of Vancouver. There's also a walkway here, a little path, nice greenery. If you like to go for walks and strolls, you have pets, dogs, you might want to take them, families. A little parking area. The water's always beautiful. That's great to be in this area. That's a nice view for sure. Got the Canada flag there. Outside picture of the building looks like a little bit older of a building here, that's for sure. Entrance to the building. A little bit of a layout here. You got your kitchen, dining room, foyer, bathroom, living room, bedroom, and the balcony, roughly at 540 square feet. And it looks like that is the end of the pictures. Let's look at the description. Designer renovation in Vancouver's iconic West End, situated at the gateway to Stanley Park and bordered by the park and waterfront on one side and the bustling streets of Denman and Davie on the other. The neighborhood is filled with options for dining, shopping, and socializing. This is the home for foodies and nature lovers alike. The home has been updated to fit the urban lifestyle with both style and function in mind. Storage is concealed but ample. Sightlines are accentuated and temperature and airflow are all accounted for. It is also the perfect Vancouver rental pad location. Now let's look at the property summary here. Looks like it's been on realtor.ca for 9 days. Built in 1965, 504 square feet. Let's check out the neighborhood here. Looks like it is pedestrian friendly, parks, groceries, restaurants around, shopping, quiet transit friendly, elementary schools, cycling friendly cafes, fairly vibrant. Let's look at some statistics here as well. Population size is 749. Average household income in this area, as you can see over here, is roughly 83,500. Number of households in the area is 491. Median age is 44.4, so 45 to 44 years old. Households with children is only 21%, and average household size is 1.5, so 1 to 2 people in the household. What we're going to do here is we're going to take this property valued at $399,000, and we're going to put it into a calculator, and we're going to see what the return on investment would be. But before we do this, let's check out the interest rates that are currently available. I'm going to head over to this website that we have here, BC Mortgage Rates. Currently, the best mortgage rates for 5-year fixed is 4.49. So what we're going to do is we're going to head over to our calculator that we built. Now, this section of this show, it's called Sunny's World. Now, in my world, I love numbers, I love data, I love analysis, and I want to make sure that whatever property that I would invest in, I want to make sure that I get the best return on investment. And I'm going to walk you through this. So let's get right to it. All right, everyone, welcome to Sunny's World, and let's get right to it. Now, we looked at the property value, it was $399,000. We're just going to put in $1,200 here just for property tax to have an idea of what we're looking at. Let's move over to our analysis here. Voila. Sunny's World, this is what we love. Thank you again to Movement. This is our digital marketing team that we have, and thank you so much, Indy, for putting this together with the team. It was a lot of work, a lot of data entry and formulas, and here we are today to provide this value to all the viewers. Thank you again for joining this channel. I really hope this section brings you a lot of value. Before we start, the information included is for educational purposes only. This is not financial or professional advice. Now let's start on this analysis. With 5% down on this home or this condo on a $399,000 condo, you are looking at $20,000 down. Now, this would mean that your remainder of a mortgage is roughly $380,000. Now, the mortgage rate that we have put in here is 4.54, amortization of 30 years. We have included of the property tax. Your mortgage payment would be roughly $1,900 a month. Now, if you are paying out of pocket and this is your principal residence, look at your salary that you currently make, look at your cost of living and your bills that you currently have, and anticipate how much it's going to actually cost you, and can you actually afford a property like this. Now, what we like to do is we're going to go through a full analysis, and we'll change it to a rental property after, as you already see it over here. But let's just focus on a principal residence with 5% down. Now, if you had absolutely no line of credits or debts whatsoever, on an average basis on what the bank may possibly approve you for, again, talk to a financial advisor like a mortgage broker, you would need roughly $62,000 to $63,000 to be approved for a mortgage of $380,000. Now, that is quite a lot of bit of money. Before, when the interest rates were roughly 1.99, let's just see what happens. You would then only need to have a payment of mortgage of $1,400, and look what happens to your salary. You would only be required to have $46,000 to be approved for a $380,000 mortgage. However, interest rates have skyrocketed, and look at the big change. This is something that you should be wary about. That interest does affect your mortgage payment. So interest goes up, be wary. If you have an open mortgage, this would significantly affect your mortgage payments on a month-to-month basis. Now, what we're going to do here is we're going to go through an analysis down here that I have already written out for everyone, and we're just going to go through this one by one. So if you buy a property for $399,000 with a down payment of $20,000, your mortgage amount will be roughly $380,000. Monthly mortgage payment will be roughly almost $2,000 a month. The equity built in 5 years would be $33,000. Now let's look at the equity build. So on a month-to-month basis, you're looking at building equity of $500 roughly. In a year's time, you're going to build $6,000 worth of equity. Now, what this means is out of the mortgage payment, apart from putting into interest, the rest is going towards the principal, and that's the equity that you are building on a month-to-month basis or in a year, as this mark is right here. Now let's move over to this being a rental property, and let's just say you put 25% down. And before we go any further, let's just change this to roughly $2,000 as if you were renting it in that area of Vancouver, which is a pretty nice area. Now, if you were renting this for $2,000, what would your return on investment be? Before we get to that place, let's go through this one by one again. With 25% down, if you buy a property for $399,000 with a down payment of roughly $100,000 because of the 25% down, your mortgage would be $300,000. Out of this, what your mortgage payment would be roughly $1,500. Now, the great thing is when you have a rental property, you can collect rent. This makes it much easier to then pay that mortgage payment. Now, if the mortgage payment was roughly $1,500 and you're collecting $2,000 a month in rent, you're actually going to be building a cash flow of rental income of roughly $375 a month. What that means is in a year, you're making $4,500 a year on this property as rental income. And out of that property that you are investing into with this rental income that's paying off your mortgage, you're also building equity of roughly $5,000 a year. Now, if we take this step a little bit further over a period of 5 years, you're going to have made roughly $23,000 of rental income. Over and above that, you're also going to have built $26,000 of equity by paying down that principal. And let's take it that much further. If we add the equity and rent together, you're looking at $50,000 that you have built. Now, that is insane. That's a good amount of money. Now, at this moment, we would like to move over to something that we call sunny to the moon. In this segment, Sunny to the Moon, what we do is we look at a potential property value increase over 5 years. And we're going to run down through this analysis one more time and see where you would be as if you purchased this property, got rental, and the property increased year after year at 3.11%. Now, this rental income that we talked about, we do also like to say that the rental increases by 1.5% year after year. So there is an incremental value increase of the rent that you're getting that you would be charging to those tenants. Now, let's just break down that analysis one more time. if you buy a property for $399,000 with a down payment of roughly $100,000, with the remaining mortgage of $300,000, your mortgage payment will be $1,500. With that rental income of $2,000, you would be making roughly $375 on a month-to-month basis. Now, the yearly return on investment on that down payment that you had put down with this rent of income that you're making, you're actually going to be getting a 4.53% return. Now, if you put the same money in the bank, you roughly would make 0.5%. So in this scenario, look at that return that you are making. That's a really good return. Now, also, the equity that you would have built in 5 years is $26,000. As you can see right here, over 5 years, $26,000. Now, if the property value increase in 5 years goes to $465,000, that is well above $399,000, that means you would make a net profit in 5 years of $66,000. Now, that is if you were to have sold the property, you'd get $66,000 just from the property value increase. Now, if you sell your house, again, you're going to be looking at other fees such as real estate fees or realtor agent fees if you do get a realtor, and notary public fees, lawyer fees, etc. However, we're discounting that. We're disregarding that. Sorry, that we're just talking about the net profit here. Now, if we add not only the property value increase, the down payment, the rent, the equity over that 5 years, this would be a return of 116%. That is a massive return. That is if you were to sell that property after 5 years with rental income and building that equity, you would have built a 116% return. With this rental property, the minimum salary required is only $26,000. The reason being is financial institutions such as banks and other financial institutions that do private lending or just general lending alone, they're going to look at the rental income as 100% income towards being able to pay off that mortgage. When it is your primary residence or your principal residence, they're only going to look at 39% of your salary that can go towards paying off that mortgage. Since it is a rental property, they're going to use 100% of that rent. Now, that makes a big difference in regards to affordability. However, again, you're also looking at $100,000 for a down payment versus as if it was 5% down, you're looking at $20,000. Now, let's go back to 25% down, and let's go back to if it was 1.99%, look at how much more you would make on a month-to-month basis, roughly $800 a month on cash flow off the rental income if you're getting $2,000 a month. That is huge. Now let's look at what your return would be on yearly return on investment on down payment with rent. Look at how high that goes, 9.57%. That is an insane number. That's a lot. That's close to 10% return on a down payment of $100,000. That's if the interest rates were at 1.99. That is roughly $10,000 a year that you're making off your $100,000. Imagine putting that in the bank and only getting 0.5%. You see where we're headed with this. There is a lot to be made when it comes to real estate. Now, I think that is good enough for the analysis here. I hope this has brought you quite some value. I do apologize if I was all over the place. Again, I'm trying to get better. This is the only third episode. And again, big up to Movement Digital Marketing. They can help you out with social media, blogging and SEO, videos and YouTube, data entry and virtual assistant, lead generation and website. Call them now at 604-283-7610. Thank you everyone for joining us on this channel. We appreciate your time. We hope that we brought you a lot of value. If there is a property that you would like us to review, please do leave that in the comments below. Please do also like and subscribe to this channel. With that being said, Sunny out.